let's explore other matters now. We see the oil market. We're seeing some kind of recovery this morning. There's also a lot of talk about oil revenue and oil production and some countries buying oil from other countries at this point. Let's discuss all of this now with Dr. Ifeoma Nwokolo, the Vice President, Economic Research, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Laddie. Thank you for having me.
So I'm seeing there are reports now that refineries in India are buying Nigerian crude. While on the other side, we're seeing the Dangote Petroleum Refinery largely running for American oil, at this point. Help us understand this.
Okay, well, we know that we devalued our currency, and the essence of devaluing currency is for exporting. And we have seen that in recent time, emerging countries like India, Vietnam, and others are beginning to demand for our export of our products, whether non-oil products, whether oil products. So that's why we are seeing that, because when you devalue your currency, your commodity becomes cheaper in the global market. So that's why we are seeing the trend. And this has led to oil tax revenue for government, and knowing that fully well that our oil production has also increased to about 1.5 million barrels per day. And if oil production increase, of course, we are going to see oil tax revenue increase as well. So this surge in the demand for our oil globally is what is leading to this particular revenue. And that's why we're seeing Naira getting stronger, because as our oil earnings increase, both oil earnings and non-oil earnings increase, we are going to see that the Naira will get stronger. Our gross external reserve has also increased to about over $40 billion recently. So all these things put together is why we are seeing what we are seeing domestically, whether in the appreciation of Naira, our gross reserve, then tax earnings for governments. When it comes to oil tax, we have seen that oil tax revenue has surged by over 41%, reaching about 3.69 trillion in first half of 2025 compared to 2024, when it was about 2.6 trillion. So we are seeing this because of the surge in demand for our commodities.
So I guess at this point, whoever is buying our commodities at this point, they're having a fun time, right now. I'm trying to imagine the time where the Naira was about 400, to the dollar, about 600. And looking at where we are now, at 1,005 something, that means those countries buying our commodities are cashing out at this point. They're getting more.
Of course they are. They're cashing out big time.
All right. So definitely not a plus for Nigerians at this point when it comes to currency weakness, because we're import dependent at this point. So definitely a lot to unpack in that scene there. But let's look at the global space now with U.S. Russia engaging in fresh talks amid this geopolitical tension. How do you see potential shifts in their relationship influencing, global oil prices? We're still seeing that range trade there with Brent and WTI.
Okay, with what we are seeing today, the market is nervous because of the US-Russia talk, which is will take place in a few days from now. And their nervousness is based on two standpoints. One, that there will be a peaceful agreement. So once there's a ceasefire, we are going to see it to escalate the supply risk. And also there is tendency that the sanction on Russia will be removed. So that is why we are seeing this happening. But this is just basically a short-term jump. Even this morning, we also saw that the oil price increased from 66 yesterday to about $67 per barrel. And this is because US-China tariff truce has been extended for 90 days. So this is additional push in the market. So all of these are short-term jump, I would say. But in the medium term, on the flip side, we'll see that in the medium term, pricing is going to be driven basically by OPEC policy, OPEC plus, because OPEC has already announced an increase in production of oil by over 500,000 barrels per day. And if this happens, what is going to happen? Let's not forget that if Goldman Sachs has also projected that oil price will decline to about $62 per barrel by the end of 2025. So in all of this, we ask ourselves, where does Nigeria stand in all of this? What is the implication for Nigeria? The implication is that as oil price declines, it is important that oil production in Nigeria increases as well. Because if you put side by side when oil price was about $73 per barrel and we're producing about $1.4 million per barrel, put it side by side now that oil price is about $66 per barrel compared to 1.5 million barrels that we are producing. You put it side by side, you see that our revenue is flat. And also, if oil price should decline to about 62%, it's also important that our oil production should also increase to about 1.6 million barrels per day. That's the only way we can maintain the revenue that we are receiving today to be flat. And also, if this happens, it's going to be a plus for us because even though oil price is falling, our oil production is also high, meeting up with our revenue as usual.
So
But if it's otherwise,
I guess an inverse relationship between oil prices and production at this point. As the prices go lower, let's ramp up more oil out of the ground at this time. All right, let's look at another, foreign currency earner now. We're seeing cocoa prices there. There's some volatility playing out with the price there. What are the factors driving that? And talk to me about supply disruptions in West Africa.
Okay, there's a weak this is just speculation driven because there's a projection there's going to be a weak crop supply from West Africa. Of course, we know that West Africa supply about 70% of cocoa in the global market, and we have seen that Ghana and Ivory Coast, we have what we call there's a disruption, climate change disruption in these countries, and this has led to a decline in their outputs. And this is meant to be harvest season, but they are not harvesting as much because of all of this and erratic rainfall in these places. And it has also been projected that in Ivory Coast that decline will continue. Before now, they were producing about 2 million metric tons for over 5 years, but now it has declined to about 1.6 metric tons in recent time. Also, Ghana's production has also declined to about 600,000 metric tons. So all of this put together are factors that are driving this. So people are purchasing for future. So it's a speculative demand that we are seeing right now. That is why prices are going high. Supply is low, demand is high. That is why we are seeing this price spike. And for Nigeria, it's a plus for us because it has also increased our earnings when it comes to non-oil production. Cocoa is one of them, and it has also boosted our non-oil earnings by over 19% in H1 2025. We saw the data came out a few days ago that non-oil production has increased, and it has increased to a ton of about more than $3 billion. So these are the things that are driving our Naira today, and we are seeing that Naira has been strengthened for quite some time.
Right, and yes. I guess the local farmers too should be benefiting from this this price hike, or is it just the is it not just the upside people captured in that value chain that are making the profit here? I hope the local farmers are making it too.
Of course, the local farmers are making it.
All right, let's look at domestic commodity prices. I did see your slide earlier. It seems we're still seeing downward movement there for most of our domestic commodities.
Yes, we are seeing downward movement, but the movement is somewhat minimal. You see 3% decline, 2% decline. We're in harvest season, though harvest season started in July, but at least maybe because we are just beginning the harvest season, we've not really seen a huge decline in prices of commodities. The decline we are seeing are very minimal. Prices are still high, but minimal decline compared to when we're not in harvest season. But going forward, maybe between August, September, October, we'll see prices taper more than this. And if this happens, you see commodity prices coming down. That's if PMS prices remain flat. Because in recent time, we saw that PMS price increase. And once PMS price increases, it affects logistic costs when it comes to taking these goods from the farm to the market and getting to consumers like you and I. So, but when we are fully in the harvest season, I think prices is supposed to come lower than this, than what we are seeing today. And let's not forget that we are already entering into the ember season. And once we enter into the ember seasons, we know what happened. Commodity prices will take another shift,
Right.
upward shift.
What do you see? Talking about the ember months, what are you seeing for fuel prices in that season?
Well, we know that Dangote will be launching his free distribution of PMS 15th of August. We are all waiting. And I know that if this happens, we may not really see erratic increase in price of PMS if that happens. And let's not forget that the price of PMS is also as a factor of global oil price. If global oil price is high, of course, we know that oil prices will increase. But if global oil price goes as low as $62 per barrel, as projected by Goldman Sachs, I think oil price will definitely decrease, coupled with the fact that distributors or PMS or filling stations are getting it at lower prices because they are not paying distribution costs, they are not paying logistic costs. So I know that this will also taper prices of commodity, because when you are buying PMS without logistic costs, and let's not forget this is across the country, is going to bring about uniform pricing across the country. So once there's a uniform pricing across the country, both in rural areas and urban areas, so bringing those commodities to here to the urban area will be cheaper, because the cost of PMS, take for instance in the eastern part, will be selling for over 1,500. But once there's a uniform pricing, it means it'll be selling for 90 something naira that is being sold here in Lagos. So there's a huge cut from the PMS price. And once that happens, you are going to see prices of commodity come down, because transportation costs will definitely come down. So
I'm hoping for a time where the market gets mature enough where we can hedge against the shocks from the global oil market, so that even though oil prices go up, PMS prices can still stay relatively stable. But thank you so much for helping us unpack this, Dr. Ifeoma Nwokolo, Vice President, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.